Good morning, everyone. Welcome to this morning's video. So this morning I have 4 pairs on watch. I didn't make a video yesterday because I had quite a lot to do, and I had a trading webinar in the morning as well. So no video for me yesterday, but I think I placed one trade at the beginning of the week, but I brought you a trade recap, if I remember rightly, of that trade, but nothing since. So 4 pairs on watch for me today, and those are Euro CAD, Dollar Yen, Aussie Yen and Euro Dollar. Just to say, I've started prioritizing my pairs in order of what's most likely to shape up the soonest, just changing things up a little bit to see if I can increase my trade frequency, but at the same time I'm not putting anything on watch that's doesn't have enough confluences in my experience for me to take the trade. Just trying to order things which do have enough confluences in the order of most likely to shape up to least, if that makes sense. But anyway, let's break these pairs down. So Euro CAD. So if we just look at Euro CAD, so remember this is the weekly chart. So this candle, if this candle closes anywhere like this today, then we would have that confirmed evening star formation. Okay. Technically, we've tapped into this area. Okay, we have near missed a little bit, but as we drill down, you can still see. I'm not worried about this gap up here, this gap here to the high. I'm not worried about that by virtue of the fact that we've had an impulse correction and a further impulse which broke the base of this correction impulsively. Okay, so if I was worried about this gap filling, then we wouldn't have had this, and then we wouldn't have had continuation afterwards, typically speaking. Okay. So what I'm basically looking for is further continuation. You can see even on the daily that we have the impulse down, the impulsive break of this lower correction sideways, and then I'm just looking for a potential continuation to the downside because we have lots of near misses here, implying that there may be a lot of liquidity and orders in this area which need to be filled, and then potentially we tap into one of these areas, perhaps break the base, then push up to the upside to give us this kind of expanding pattern because of the fact that that high near missed to these highs here. Okay, so that's just the thinking at the minute. Okay, so let's get those doodles off the chart. As we drill down, you can see the correction forming. I'm not a big fan of these wicks here. Okay, so that is a slight negative, but if we just analyze the structures, we can see we had a bit of a corrective move first. Okay, we dropped out with this correction here with the 1, 2, the gap that we typically see, come back up, fill the gap, move to the downside. Okay, so I can see all this before I've even dropped down to the 1 hour. Then we leave a bit of a footprint there. Okay, we leave a gap to it, come back up, we wick to the area, but not really through it. We did wick slightly through it. We scoop back up for a double top, move to the downside. We have this 1, 2, 3 kind of downward sloping structure there. We break out of that. Okay, I'm not too worried about this correction here at the minute because that is above here. Okay, but what we do have is a near miss to the back end of all of this volume. Okay, so there's likely a lot of volume here from a support and resistance perspective, which is why we've gapped to it. Okay, so what I'm looking for essentially, what I'm looking for at this moment in time is, so this is a larger 1 hour structure. So therefore my rules, I can't see the structure of this yet on the 4 hour chart. It's just wicks. Okay, so until such times as I can, this is a 1 hour structure. So what I would be looking for is a 1 hour flag like this, and then I would look for a 1 hour entry within it. Okay, so what I'd need to see is price to come down to fill those wicks to give us a bit of a base, and then tap into that area. If we got that, we would likely spike above, retest the back end of that, and then I would look to get short there. Okay, and then I'll be able to manage it down to the base of this structure for something in the region of 3 to 4%. And then if we just measure this impulse here, and we assume that the continuation leg out is of a similar length, that would take us down to that area. And if we measured it from the break, that mathematically lines up almost perfectly with that sharp move there, which is often where there's liquidity, a sharp move, and the near miss of all of these. Okay, so that's the first target. I would anticipate quite a bit of profit taking there, so price could pull back quite deeply, even if it does continue going. So by setting a take profit down there, we're not leaving too much profit on the table if we get to that area. Okay, so I've got an alert set just below the high of this structure. If it doesn't trigger, I don't need to check this pair. Okay, so dollar yen. Let's have a look at dollar yen. So dollar yen, I'm neutral on this pair today. I'm neutral partly because we've broken below here and pushed to the upside. Okay, so we do have this impulse correction continuation. So because we've tapped into that, where there was a sharp move, a big move to the upside last time around, that could be enough for the time being for a further correction sideways and price to keep going to tap into these near misses here maybe, okay, or even just into this high here, or there's a 4-hour inflection point, 4-hour area of value there that might be significant. However, because we've left a gap to this low here, there is a potential short at play, and I'll show you that as we drill down. So there's a potential short at play because we've expanded into this area. Okay, we've expanded by way of higher highs and lower lows. Okay, so this could be expansion in price, which taps into, I've lost my train of thought. This could be an expansion of price, which taps into this area of value here. Okay, we have a sharp move here, where there was an exchange of liquidity that caused price to smash through all of this volume. Okay, so there could be a lot of volume here for the sells, and we have that expanding pattern as I've just mentioned. Okay, but also equally, this could be moving sideways to give us something like that. Okay, and this is where it retests the back end of that, and then we can potentially look to get long to take us into this hook point, which was the footprint that was left after price completed its structure. Okay, so what I'll be looking for is I'll be neutral on this. You can see at the moment we're correctively moving down, so it could be that sideways correction and then the move to the upside. But all this would take is one candle to just drop out and to give us something like this. Okay, so if we get a push down, impulsive push down, that's suggesting that price found liquidity here. Okay, then I would look for the correction afterwards, and I would look to get short, and I would set a take profit down there because that is the near miss to here. Okay, and if we just measured that from the range, that would be almost bang on 90%. Okay, where price can often pull back deeply even if it continues going. So I would set a take profit there. Or if we just go sideways, if we got a structured 1-hour correction, so I could see the structure on the 1-hour chart, which you likely would if this was going to do something like that, then I would look to get long there with a 1-hour entry, and I would be targeting that footprint that I was talking about there. So that is dollar yen, and even to there we'd have about 6% to work with. So 2 alerts set there, one to see if we can push up to give that more structured flag, and another one just to see if we drop out. Okay, so if neither of those alerts trigger, I won't be checking this pair. Aussie yen is pretty much the same deal. Okay, the same deal on. I've just put this slightly lower down because the way that it's wicking. So you see how it keeps retesting the back end of that. Okay, that gave me a clue that this potentially give us that sideways correction, which means that it could take longer than, this is not retesting the back end of this yet. It hasn't really, we haven't seen those wicks. So to me, this seems more likely that this could just drop out, whereas Aussie yen looks more likely because it keeps retesting the back end of that. It just looks a bit more likely that it could keep going sideways, which would take longer. Okay, so that was just part of the filtering process, but whoops. So same deal on Aussie yen pretty much. And another thing which kind of adds confluence to the potential long idea is if you look on Aussie yen, we haven't near missed to that area. We kind of have, but it's negligible. Whereas with dollar yen, what's happened? You can see the clear gap to that low. Okay, so either we're getting that sideways correction on the lower time frames to push higher. Another thing which adds weight to it is all these near misses. So we have a near miss to here, near miss to here. That also adds confluence to the potential long idea. But because we can't, and the fact that we've broken below this significant area and pushed up, however, because we have reached that area by way of a structure, I mean, you could have your trend line plotted here, here. I've just put it to sort of the most recent two. I mean, you could have it here if you wanted, but then the angle wouldn't really make sense. But regardless, we have that kind of 1, 2, 3. We have the middle section, the impulses, the impulse correction continuation. Those impulses are of a similar length. So this is potentially a completed move, this 1, 2, 3, which either means that we either need to build more volume to push higher, or price is going to find volume from somewhere. And why would it find volume from here? Because if you look what happened last time around, there was an exchange of liquidity there where so much liquidity was exchanged that we had a massive runoff, and we saw enough of an exchange for price to smash through a very, very significant low. So this could be significant for the sells. We shall see. Just staying neutral. And what I'll be looking for is the same thing again, okay, as I was looking for with the dollar yen. Either we're going to get that sideways correction, okay, in which case I would need to see a 1 hour structured. I'd need to be able to see the structure on the 1 hour chart, and if I could, then I would get long with a 1 hour entry up to that wick up there, okay, the first near miss of these series of near misses where there's likely a zone of orders. Or I want to see a dropout, so I want to see a dropout here. Okay, the more this does this, so if this just keeps doing this, the more of a dropout I would wish to see, because otherwise you just get tagged in and tagged out, and then price, becomes something like that. Okay, so the more it corrects sideways, the more of a dropout I'll be looking for, if for the short idea. And if we don't drop out, or we don't correct sideways to give this larger correction, then I don't need to check this pair. So that is Aussie yen, and you can see the profit potential is pretty good down to this first inflection point there. We'd have 4.5%, and then I would target that first near miss down there, okay, of this series. So we also have a reason to go short as well, because of near miss to here, and then we have a near miss down there to the base of that as well. Okay, so there's lots of confluences for the long and the short. We just need to let the market show its hand and see what it wants to do. And if it doesn't, then I don't need to check this pair. So that is Aussie yen, and euro dollar is just a little bit of a kind of hedge play. So on the higher time frames, you can see, if we just zoom out, so we've tapped into an area of significance there where there was an exchange of liquidity last time around, which caused a very big sell-off to the downside, okay? And you can see that we've tapped into that area, pushed to the downside, and now we have potentially that morning star formation, or that early morning star formation. However, when we zoom in, you can see, whoops. So at this moment in time, the question I'm asking myself is this ready to go short? Now, it has an impulse correction continuation, but it broke the low. I would say that it broke the low correctively, even on the 4 hour chart. That's not an impulsive break, because you have the big wick below it. You can see we're likely because of that, largely we're already pushing to the upside. Okay. If you look at how it broke the structure on the 4 hour chart, so we had all these gaps here. We negligibly broke the low, then we get the wicks, and then we push up again. Price did not break this low impulsively, okay? However, all the while, and we do have a reason to push to the upside, because we also have the gap here where we've moved down. We have a gap here to this high. Okay, we moved down correctively from that area, suggesting price didn't find enough liquidity. The whole move has been corrective on the way down, and we also have potentially, we could be seeing an expanding pattern into that area. The fact that the whole thing is very wide relative to this move down, which has preceded it, could mean that it becomes more neutral and we just pop up. Okay, we get the kind of M style pattern, and we also have on the higher time frames, we do also have where is it? We have a gap, a bit of a gap from here to this exchange of liquidity there, where there was a big sell-off as well. So I'm factoring all these things in, but all the while we're contained below here. The short is potentially still in place, so we might see a gap. You might see something like that, move to the upside, tap into that area, and then that volume that's been generated is enough to send this to the downside, irrespective of what has happened, irrespective of all of this and the other things I just showed you. So where does the buy, and that wouldn't be ready by the end of the day, okay? So this is a daily forecast. So where would that sell idea become invalidated? Well, in my opinion and experience, it would become invalidated if we break above this area of interest as I've got it marked, and then I would look for a correction sideways afterwards, a 15-minute correction, because if you take a 5-minute, you're more likely to be tagged in, tagged out, and then price does something like that, and then perhaps we start moving to the downside from there. Okay, I won't be looking for that personally, but that's a potential. So I'll be waiting for a 15-minute correction sideways, just a little bit more deliberacy, and then I'll be looking to get long within the correction or on the break. Okay, and I would not be targeting the near miss in this instance like I have on the other pairs, just simply because I can't get I won't be setting a take profit there because I can't get a 5-to-1 until that area. Okay, and also it's not sharp as well, just to touch on it, it's not a sharp move there, so we're potentially less likely to react from there anyway. We're more likely to respond from here. So I would set the take profit at this high in this instance, just in case we do respond from there, given that we've actually gapped to it, and that might be where the liquidity is. So this would just be a quick trade, okay? And since I'm not holding trades over the weekend anyway, then that might not be a bad play, okay, for just a quick short move. Potentially we could be up there by the end of the day. We'll see. We do appear to be getting a little bit of momentum here, but we'll see what happens. That is my forecast for today, folks. I hope you've enjoyed this video. I hope it has provided you with some value, and I'll see you again in the next one. Have a great weekend and a great rest of your day.